technicals of the markets, it's time to talk fundamentals. Rakshit Ranjan from Marcellus Investment Managers is joining us now to discuss just that. Rakshit, good morning. Thank you so much for joining in. Well, we've been talking about trends, and one of the trends that you've highlighted in your report as well is while the corporate balance sheet seems to be doing well, the household balance sheets are not doing so well. That's the trend that we have seen. Do you think at some point in time, these two trends will converge, and that is something that will hurt consumption overall? And that is something which we saw in quarter two, of course, could continue going forward as well.
Yes, good morning. Thanks for having me on your channel. So, yes, you're right. In the short term, the two trends are divergent. In the long term, they have to converge in the sense that if healthy corporate balance sheets lead to increase in capex intensity, then that does lead to job creation, which has been weak in the broader economy and should help boost consumption thereafter. So that should be the way to go for from a long-term perspective. But I think if it's about 1 or 2 quarters, the divergence might continue, where consumption trends being weak because of over-leveraged household balance sheets and weak job creation in the recent past doesn't get any support from healthy corporate balance sheets if private capex doesn't pick up in a meaningful way.
Rakshit, we'll get back to that theme. Just wanted to first get your views in on Divis, because we know you're bullish on Divis Laboratory. Does the US Biosecure Act being dropped for now at least change your view on Divis? How would you read the development?
Right. So this is something which would have fed into the pipeline of product generation, particularly after another 7-8 years. If this is a permanent shift, then certainly Divis will have to fulfill that longevity of growth via other means, rather than the benefits that this sort of a regulatory tailwind would have provided. But I think net, when you talk about longevity of a business like this for time periods beyond the next 7-8 years, this is a company which has only grown its competitive advantages deeper and deeper with the big pharma. I do not think regulatory tailwinds are incredibly necessary for Divis to continue to compound its earnings beyond the next 7-8 years at a healthy pace. Having said that, never say never. We'll have to keep monitoring the company-specific aspects. As of now, for the next 5-7 years, this catalyst is, the Biosecure Act would have kicked in from 2032, and we'll see how the next government, the Donald Trump government, looks at this act. But yeah, it does make a change to the very long-term longevity prospects, not to the next 3 to 5 years of earnings growth of Divis.
Okay, so this is something which, of course, we'll get to know more about next year itself once Trump also takes over office, and we'll get more details in terms of the policy support as well. I was looking at your note, and it speaks about you have some of the portfolio companies which are sitting on surplus cash piles, which you're liking. Do you think now is the time for them to deploy the cash and look for newer opportunities? Which are some of the segments that you like with this particular theme?
So yes, that's a theme for a few industries where consolidation is going to be a significant driver of growth for winners in the industry. So for instance, in the diagnostic space, we've got a business in our portfolio. In the cash management space, we've got a business. Now, these are, so diagnostic is a hyper-local business. You cannot organically keep growing geographies in a concentric circle manner beyond a point. And hence, in a hyper-local business, geographical expansion typically comes with consolidation as an opportunity. The firm we have in our portfolio has already done one large acquisition, probably the largest M&A so far in the sector, and it has managed to digest it with a 1.5 to 2 year lag after acquiring in a very nice manner, margins, growth, etc. So the prospects of M&A in that regard remain high. Likewise, let's say cash management, the number of ATMs going down or remaining unchanged doesn't help deliver healthy organic growth. So new business opportunities have to keep getting added, whether they be organic or inorganic. And again, CMS info, which is in our portfolio, it has done several inorganic activities in the past in a very successful manner. So in those kinds of industries where consolidation is the way to go for, from a long-term perspective, having cash at this point of time when valuations have corrected for the target assets, when stress might have increased in a weak economic environment for the target assets, having cash on the balance sheet does certainly make for some advantage compared to a euphoric external environment.
Thank you, Rakshit, for joining in. Short conversation today, but